Welcome to the Westchester Continuum of Care training covering client rent calculation for participants in Continuum of Care permanent supportive housing. This training covers how to calculate and document the amount collected monthly from participants in Continuum of Care permanent supportive housing. It does not apply to Continuum of Care rapid rehousing or transitional housing or other programs serving persons experiencing homelessness, such as ESG. The rules for client rent and occupancy charges for COC permanent supportive housing participants are found in the COC interim rule at 24 CFR 578.77. Providers must document client household income at move-in and then at least every 365 days as long as the participant resides in COC housing. The clients must provide new income documentation every year that they continue to stay in the project in order to remain eligible. COC regulations point to the rules for housing choice vouchers, or Section 8, for how to specifically calculate the exact amount each client pays for client rent. This slide shows those Section 8 rules. Clients owe the highest of either 30% of a household's monthly adjusted income, 10% of the household's monthly income, or if the client is receiving an amount from DSS specifically for housing costs that is paid directly to the landlord, also known as a welfare rent. Obviously, 30% of an adjusted income is almost always higher than 10% of the income. So almost all clients either owe 30% of adjusted or a welfare rent if that is being paid by DSS. This slide lists the sources that are included in the income total. It includes most of the usual income sources that a household may receive regularly, such as income from a job, regular monthly payments from the Social Security Administration, either retirement, Social Security, or SSI, or SSD, veteran benefits, retirement income, a pension, unemployment, disability, or workers' comp, DSS, cash assistance, alimony, child support, and regular gifts, such as, for example, if the client's sister gives them $200 every month, that should be included in their income, since it's a regular contribution. There are a number of more unusual sources that should be excluded from the annual income total. That includes money coming in from jobs held by children, that is anyone under 18, one-time cash infusions into the household, such as one-time gifts from family or inheritance, foster care payments, lump sum payments from the Social Security Administration, reimbursements for medical payments, and the earnings of full-time students other than the head of household above $480. Here are additional income categories, some of which I just mentioned, that are excluded from income. But all of these that are excluded are relatively rare, almost all regular income from almost all households is included as income. As we mentioned, most households pay 30% of adjusted income. Adjusted income means the total annual income minus deductions. There are 4 mandatory deductions that are used to reduce the annual income before the 30% is calculated. That includes $400 for disabled head of household, since all households that are enrolled in continuum of care permanent supportive housing have a disabled head of household. This $400 deduction applies to every calculation we are discussing. In addition, $480 is deducted for each dependent in the household. Dependents include children under 18 or disabled members of the household other than the head of household and their spouse. In addition, expenses related to childcare that allow the head of household to work can be used to reduce total income. And finally, medical expenses above 3% of total income are deducted from the total income. So for instance, if the household income is $10,000 a year and medical expenses are $500, only $200 in medical expenses are deducted, because 3% of 10,000 is 300, so only medical expenses above $300 are deducted. All of these rules are included in the Westchester Continuum of Care calculation form, which is available on the Westchester COC website at the link shown here on this slide. You can use this calculation form to calculate occupancy charges at move-in and then every year. In addition, if a participant income decreases significantly within that 12-month period, and an early recalculation can be done to reduce the amount of monthly rent owed by the client. You do not need to and should not recalculate early if the client's income increases. HUD wants to include utilities in the continuum of care housing subsidy. This can be done by including utilities in the lease so that the utilities are paid by the landlord. Or if the client pays for utilities, a utility allowance is deducted from the occupancy charge so that the client pays less and can use that extra money to pay for utilities. The amount of reduction increases the amount that HUD pays, so that HUD is effectively paying for those utilities. The utility allowance is a standardized amount which is deducted from every client in a similar unit for utilities. Utilities does not include cable TV or internet or phone, but does include heat, hot water, electricity, and cooking gas. Most local leases in Westchester include heat and hot water in the lease. I'd say over 95%, so that the utility allowance only includes charges for electricity and cooking gas, and air conditioning if an air conditioner is present in the housing unit. Here is an example of a utility allowance determination. This is the 2022 utility allowance schedule published by the Westchester County Department of Planning. You can see four charts, four tables for different building types, for single family, townhouse, elevator apartment buildings, and low-rise apartment buildings. In this example, the COC participant household lives in a one-bedroom apartment in a building with an elevator. So we use the table in the lower left-hand corner. The landlord covers heat, hot water, and other utilities, but the participant pays for electricity and cooking gas and has an air conditioner. Therefore, the red circles indicate that the utility allowance totals to $50, $2 for cooking gas, $40 for electricity, $8 for air conditioner. The utility allowance is entered on the Westchester COC client rent calculation form in line 16 and is then automatically deducted from the client rent owed by the participant household. The next few slides show some worked examples of a client rent calculation with annotations showing the decisions made. In this example, the household has $1,000 of employment income each month, so that the annual income entered into line 1 is $12,000. There are 2 children in the household, so 2 is entered into line 2, and therefore the deduction for dependents is 2 times 480 or 960 automatically calculated by the sheet in line 3. The household has $1,140 in child care costs that allow the head of household to work and gain that $1,000 a month. The sheet auto calculates in line 6 that 3% of 12,000 is 360, so that after medical expenses of 660 are entered into line 10, the sheet automatically calculates and enters into line 11 that $300 in medical expenses can be deducted from the gross income. 660 minus 360 equals 300. As we discussed, every permanent supportive housing participant household gets the $400 disability deduction entered into line 12, so that the total deductions for this household is $2,800, $960 for the 2 children, $1,140 for the child care costs, $300 for medical expenses above 3% of income, $400 for a disabled head of household equals $2,800. And so the adjusted income, 12,000 minus 2,800 is 9,200. 30% of the 9,200 divided by 12, the monthly amount is 230. This household has in this example, a utility allowance of $21, and so the resident rent that would be owed by this household is $209, auto-calculated by the sheet. However, this household also receives a welfare rent, $314 from DSS paid to the landlord. And so as we mentioned earlier, the household owes the higher of either the welfare rent or the 30% of adjusted income. So this household does not owe $209, they owe $314, which is the welfare rent, and actually this household wouldn't pay no cash of occupancy charge. DSS pays $314. In this second example, this is a single client whose income is $965 a month from SSI, with $84 deducted for Medicare premium, so that the check is $881 a month. Medical premiums deducted from SSI, of course, are medical expenses, but we remember that we only deduct those expenses above 3% of gross income. So we enter in line 1 the annualized amount of the SSI award, which is 965 times 12, or 11,580. We then enter 12 times the medical premium deduction, 84 times 12 equals 1,008 into line 10. The sheet automatically subtracts 3% of the gross income from the medical expenses, so that the medical expenses indicated in line 11 auto-calculated as $660.60, which is 1,008 minus 347.40. $400 in line 12 is the disability deduction that applies to every PSH household, so that the total deductions, $1,060.60, is the combination of the medical premium deduction, medical premiums above 3% of income, and $400 for disability is $1,060.60. That is deducted from 11,580 gross income, so that the adjusted income auto-calculated in line 14 is $10,519.40. 30% of the that monthly adjusted income is $263, auto-calculated by the sheet, with a utility allowance of $21. That means that the monthly client rent occupancy charge for this permanent supportive housing participant is $242 each month. This third and last example, we have a single client, no other members of the household, whose only income is $91.50 paid by DSS cash assistance twice each month. So to get the annual income entered into line 1, $91.50 is multiplied by 24 for a total income of $2,196. As we mentioned earlier, DSS cash assistance is counted as income by HUD for the purposes of determining how much client rent a client owes. This client has no deductions other than the mandatory $400 disability deduction that applies to all permanent supportive housing households, so that the annual adjusted income is $1,796, $2,196 minus $400, and divided by 12, and then 30% equals $45 a month. This household has a utility allowance, however, of $63. 45 minus 63 gives us a occupancy charge of negative 18. Where clients have a negative client rent indicated at the bottom of the sheet in line 19, that means that the client is owed money for utilities each month. HUD calls that a utility reimbursement. The permanent supportive housing provider should pay the client the amount of the utility allowance every month. In this case, the provider would pay the client $18 every month, and HUD will reimburse the housing provider for that payment to the client. Your continuum of care admin team includes Jo Marie Tarshun, coordinated entry administrator, who is assisted by Latanya Rosado and Allison McSpadden. Carl Bertrand and Craig Wong are the COC board co-chairs, assisted by Yoav Spiegel. And our HMAS administrator is Daniel Gore. Thank you.